Kia ora, everyone, and thank you and welcome to another Good to Know webinar from Healthcare Plus. I'm Alan Sharp and I'll be your host for tonight. In today's session, which will last about 45 minutes, we will focus on life, income protection and trauma insurance. In particular, what are the challenges, changes and possible opportunities facing those of us who have purchased insurance or are thinking about their insurance options. Joining me this evening are Shane King and Kim Mason, who are part of the Monument Insurance Financial Advisor Network and who personally look after a number of our members' interests in the Wanganui, New Plymouth and Bay of Plenty areas. We asked you all to register for your questions that you wanted to get answered around life insurance and particularly in today's climate. We know this is a big issue amongst our members, and to be honest, the response was pretty huge. We got so many questions in, so I've put together a sample of those questions, most commonly asked questions, and I'm going to go through that with the team tonight, and I'll put those questions to them, and hopefully they'll answer that on your behalf. However, if you do think of some questions during the session and you want to ask anything that comes to mind, then you can do so through the chat and the Q&A functions. If you look above your screen, you will see the Q&A and the chat function. If you click on those icons, then they'll appear, they'll open on the right, and you can type in or ask any questions. I'll monitor that through the session, and if we have some time at the end, we'll go through them. However, if we don't have time at the end, then we will be pulling together a question and answer blog article that we will send out to everybody who registered for this evening. We will also send out a recording of the event to everybody who registered for the evening and unfortunately couldn't make it tonight. And you can watch that again, or you can, if you think it's interesting and other people might be interested in it, then please pass it on to your friends and family as well. But before we start, I'm going to do a quick poll. And you can access that either from your chat function or from the polls icon above. And the question is, are you currently considering reviewing your insurances? And if you could answer either yes, no, or I don't have any, then that would be great. Please do that now. Thank you. Ah, interesting. That's some good figures. So it looks like we have about 60% of us this evening who are on the poll are looking to review their insurances. So hopefully we can help you out tonight with some good information. So anyway, enough of me. I'm going to introduce you to Kim and Shane, and then I will start the Q&A. So hello, Kim. Hello, Shane. How are you guys doing?
Hi, good, thanks.
Hi. Awesome. Thank you for turning up and helping us out tonight. So I've got a few questions here, and I'm just going to run through them, and we'll do a bit of a quick Q&A. So most of these questions we've blocked them into sort of themes, and I'm using a specific question that kind of fits the theme of the other questions that were asked of us. So the first question here is, everyone is talking about the cost of living crisis. What are you hearing from your clients, and what actions can individuals take to manage their way through the crisis, in particular with, I guess, their insurance policies that they have? And I think, Kim, I'll pass that one over to you first.
Well, thanks, Ellen. Thanks everyone for joining us, and it's great to be here. Just before I start speaking to that, I guess I do just want to say that anything that Shane and I are sort of saying at the moment, it is all really like general advice. We're not giving personal advice. So just keep that in mind. For personal advice, you do need to make sure that you do go and have a chat with your financial advisor. But Ellen, going back to your question, you're so right. Everyone is talking about the increased cost of living, and it's really affecting, how people are spending their money. Some people are really hurting financially right now. On a positive note, and it's always good to kind of go in with a positive, I do feel like, this kind of tightening of belts, it is getting people to analyze their spending more than ever. And so, part of that is reviewing some of those regular costs like insurance. And this is really positive because it moves people away from that old kind of set and forget attitude, and it moves them towards a more proactive one, because you should know what you're paying for, especially when it comes to insurance. And insurance cover should just never be set and forget. As your life keeps changing, our insurance cover really needs to be tweaked just so that it remains fit for purpose. And I mean, it's awful stuff to think about, but we do need to be thinking about those scenarios that would really affect us financially. If you or your partner die, if you or your partner are not able to work due to sickness or accident, if you're diagnosed with a really serious illness, or if you require surgery. And then, it's about ensuring that we're paying for the correct amounts and types of insurance cover that are going to really protect us, like actually in our current situation, and not the situation that we were in 10 years ago. So just regularly reviewing your insurance cover can help with ensuring that we're not paying too much. And a bit of a funny story, a client that I was actually speaking to last week, she'd been making, she'd only just noticed that she'd been making a payment of $30 odd every fortnight for the last 20 odd years. And they had sort of just didn't even really know anything about it. And that's over $15,000 over that period of time. And I think that just goes to show that, people are starting to look a bit more in depth at what they're spending their money on. And, if that one positive that comes from the cost of living crisis is that people do that, become more aware of where their money's going, and, I guess also be more proactive and interested in kind of keeping their costs like insurance relevant and current, then, that's got to be a good thing, right?
Yes, it is. Absolutely. I mean, I think just to take up your point, I think set and forget is something that a lot of us do with our insurances, to the point that sometimes we can't even remember what we're covered for. So I think it's definitely a good message to get across that now is definitely a time where we should be proactively looking at our finances. And if that involves us reaching out to a financial advisor and saying, hey, is my insurance right for me right now? What should I be doing? Then I think that's a really good message. So Shane, have you got anything more that you'd like to add to what Kim was saying?
Oh, look, yeah, and hi everyone out there. I agree with everything Kim's saying. We're all feeling the sort of increase in food and your other insurances, just the general costs of running a house. So certainly affordability is an issue at the moment.
Cool. And so so what I would like to know is, what advice are you giving to those people who maybe are coming to you saying that, hey, look, I don't know if I can afford my insurances, because maybe they've looked at their budgets, things are tight, that kind of thing. So Shane, have you got any examples, or have you been talking to people, or what are they saying?
Yeah, I mean, affordability, it is a tough time at the moment, and it is something everyone's going through, but I don't think it's a unique situation. But premiums do always sort of go up, and people get older, and you do have to sort of keep reviewing things. What I do often hear, and I think it's probably reasonably well known in the industry, that people tend to think insurance is a sort of a nice to have rather than sort of a must purchase. And that's probably my experience. I've been doing this for 18 years, and that's often what I hear. But just an example, I had a client a few years ago, and they actually emailed saying they wanted to cancel their insurance, and I just sort of got the gut feeling through the tone of the email that something wasn't quite right. So I got hold of them, and after a few attempts, and had a bit of a chat. And what it was, that they'd only had the cover for about a year. And I thought, gee, that's not right, sort of wanting to cancel after a year. And what sort of transpired was that they'd actually had a medical condition that had stopped the partner from working. And I said to him, hey, look, that's potentially a claim. So I helped him through the claim, which is part of the service that we do offer. We don't want to leave you stranded dealing with the insurance company on your own. And they end up being on claim for 10 months. So instead of now struggling, their mortgage was being paid for them. Their premiums were being paid for the policy for all people who are insured on that policy. And I guess my point for them is it wasn't a nice to have. They actually needed it because the partner couldn't earn an income. So the family was really going to struggle. And that particular insurance they had avoided them from having to make some really tough decisions that could have potentially led to losing their home. So my advice is simply to look at your spending. Don't think of insurance as a nice to have, but again, get advice to make sure you have got the right insurances in place, and look where else you can cut back. It might be dropping those couple of coffees a week, just to make sure your family's looked after. But yeah, that's sort of my advice around it. That is to get advice and just make sure you have got it targeted.
So I guess what you're saying there is maybe it's not a case of you can afford insurance, it's can you afford not to have insurance, is possibly what you're saying there, Shane. So Kim, have you got anything more to add to what Shane was saying there?
Oh yeah, look, like what Shane is saying is absolutely right. And I think it's about working together kind of like collaboratively to make sure that we, can get some cover in place. And an example here is a client of mine recently, her marriage broke up. And so her, her budget for insurance, it literally more than halved. And actually she thought to start with it, she was probably going to just cancel everything. We had a number of, conversations about her new situation. And, when we were really thinking about it, in a lot of ways that insurance was actually now more precious than ever, because being now the sole income earner in her household, having that income protection and mortgage repayment cover, I mean, the buck kind of stops with her now. So, making sure that we could keep some of that in place was really important. And just, being able to work through the process and kind of prioritize, the importance, unfortunately, it meant that her medical insurance, for instance, she cancelled that. I'm not suggesting people do that, but in this scenario, she cancelled that because that wasn't her top priority. Ensuring her income was. We had to make a few, tweaks. We had to decrease the amount, and we also decreased the wait period as well, because she didn't have a whole lot of sick leave. But I think when it comes down to it, while she doesn't at the moment, I guess, have what some would say is, the optimal amount of cover, she's got some cover. And I think that's what's really important in this situation. I think it's really important to say here as well, like, don't ever be scared or embarrassed to tell your financial advisor what your budget is for insurance, because from our point of view, it's really, really helpful to know the parameters that we are working with, because, when it comes down to it, we've all got a finite amount of funds. And yes, we'd all like to, have as much insurance as possible, but, we've got to work with those factors, with the amount that we've got. So that's where we actually can help work with you and help prioritize what's going to be the best insurance that you are kind of, I guess, going to get the most bang for your buck in terms of, how it's going to affect your family and yourself, if you did need to make a claim.
Thanks, Kim. That's good. So, I mean, I guess what we're saying here right now is that probably now is a very good time to be having a review of what your insurance arrangements are and getting in touch with your advisor. I mean, and that's clearly being driven right now, I think, by a question of affordability. But I guess there are other circumstances, or are there other circumstances where you might also want to I guess, trigger a review of what's going on with your insurance arrangements? I mean, is it something that you should be doing on a regular basis, Kim?
Yeah, oh, look, absolutely. A very regular basis, because, like, you think back in how much your life has changed over the last 5 or 10 years. Our lives are always changing. And, there are lots of instances where those changes actually mean that you should do a review or a little tweak. Things like, you know, when you have kids, and gosh, I've got 4 of them, so I know a bit about this. And, you know, while kids kind of seem to eat money, investing some money in insurance cover to protect them, you know, if you pass away or something like that, you know, that can be a really good idea. Other changes that could affect or could trigger a review would be, you know, when your kids are leaving home, if your relationship breaks up, if you're retiring, if you are really ill, if you're made redundant, that kind of anything that could affect your financial situation. You know, it's about continually tweaking, and don't be kind of frightened by that whole review. Like, it doesn't have to be a big deal. It's a review is a conversation with your financial advisor. It's just saying, hey, look, this is what's changed. You know, what should we be looking at here? So there's no drama. We love doing it. So yeah, just having a review all the time is actually a really good thing.
And one thing I just want to clarify, when you have a review with your financial advisor, there isn't a charge for that, is there?
No, not at all. No, not at all.
No, that's good. Someone's just put through in the chat, if there is no major life changes, how often should we ideally do a review of our life insurance or our insurance policies altogether?
Look,
I'll open that up to either of you.
Sorry, do you want to? Sorry, you go, Shane.
Yeah. Look, I would. We send out an email once a year just offering a review, and that's more of a prompt to say, hey, we are here. But it's also not just for a review. It's something could have happened during the year with their health, and there could be a claim they don't know about. I came across a client I reviewed who was with another advisor, and she'd had cancer 3 years prior. Thought nothing of it because it was removed, and it was a trauma claim that they got paid out. So even if it's to do with your health, get in touch. But going back to the question, if there's nothing major, you know, maybe every couple of years, if you have a mortgage, that may reduce. You may need less cover. As the children, I've got 3 kids. Stopped at that. That was enough. But they're getting older now. My youngest is 13. The oldest has just turned 17. So as they become more independent, which all 3 of them think they are now, it's very much I need a lot less than when they were 1 year old, 2 years old. So if you do have children, you know, think along those lines. If they're getting a bit older, if your mortgage is coming down, so there may not have been major changes around buying houses or having children, etc. But just you might be able to tweak it up a little bit. It goes up with inflation. I saw a question pop in around inflation, and do you have to accept those? You may not need to. You may be able to take it back to where it was because that may be sufficient. Changes of job, if you get a promotion. So I know we talk a lot to teachers, for example, could be rated different to a principal. So premiums could be a little bit different. You could be able to save on that. Increases in your wages, you may be able to increase that without underwriting, which is really important. I've had a couple of those lately where a person's health has changed, but we were able to increase the cover because they don't look at health. There's stuff within the policy wording. So all those kind of things, maybe small changes, but maybe we can do a lot with your insurance to help with that. But
yeah, I guess what you're saying there is that if you're having a look at your current situation as well, and maybe insurances come into that, then have a conversation with the advisor. It doesn't necessarily mean that there's something major has happened, but there could be opportunities to have a look at what you need to do or remove. Because it can either be added to your insurance or actually you can tweak it and reduce your insurance cover if you feel that that's actually appropriate to your point in life. Just going back to I guess current times and the whole issues that we're having around sort of cost of living and the increases in prices during these difficult times. This came through quite a lot. What could insurance providers be doing to assist individuals? And I'll go to you, Shane, on this one.
Yeah, so there are a few tools insurance providers have, and maybe if I take everyone's mind back to COVID, not that you want to take your mind back to the COVID days, but a lot of people were either losing jobs for one reason or another. Finances were really tough. So insurance companies have things that we call, we refer to as like premium holidays or premium suspensions. One particular insurance company I use a fair bit, and they're all very similar. You have up to 6 months over the life of the policy where you can have a premium holiday for things like if you lose your job, become bankrupt, if you're on leave without pay because you've got to look after a partner or a child, then they can allow you to actually have a premium holiday where you don't have to pay your premium, but they keep the cover in place so you can still claim on it. But then there's other situations like a premium suspension where they can suspend your premium, but you won't be covered for anything that happens within that period of time. So again, if you're going through a tough time, the insurance companies even will step outside of that in some cases as well if they can see you're going through a genuine tough time, and suspend your policy. So get in touch with your advisor. Don't what most people do is they just jump to I can't afford it and cancel. Don't do that if you can avoid it. Get in touch with your advisor, and they're the right ones to be able to help you with that. Apart from that, one of the insurance companies I see who didn't have options in the past where you could, there's a few different bells and whistles within benefits. Examples could be a buyback on a trauma, or there's trauma benefits within an income protection. So what they've now done is they've added options to take those away, which helps reduce the premium. So instead of having some of the bells and whistles, which do really help people out, I've had claims around it, but instead you can just have the basics. So if all you're wanting to do is, if I'm sick, I want my income replaced, then you can do that without having the lump sum bells and whistles. So there's a lot that can be done. So again, we'll keep saying it, get in touch with your advisor.
Okay, Doc, and I would agree with you, because when you start using terminology like lump sums, bells and whistles, I'm lost. And so I guess at the end of the day, we need people like you to talk us through exactly what we need and what we've got, or what we don't need and what we don't have. So that's great. Just wanted to also just clarify, when you talked about a premium suspension, what you said was quite important in there, is that if you do go on a premium suspension, you wouldn't be covered for that period. I just wanted to reiterate that, because in case anyone thinks, well, that's a great idea, it wouldn't cover you. Kim, have you got anything else that you might want to add to that as to what's going on?
I think Shane just said everything that I was thinking, and a whole lot more as well. I think just one thing though, it's important to know, I think, just know what, I guess, the inbuilt benefits are for your policy. Not things that are specifically for tough times necessarily, but just the stuff that's already in your policy, that could be helping you, that you just aren't sure about. And like an example of this is a client of mine who I was doing a review with. She just really casually mentioned, oh yeah, I've got lots of time to do this review because I'm off work because I've broken my ankle. And she did have income protection and mortgage repayment cover, but because she wasn't actually going to be off work for very long, she hadn't even thought about a claim because her wait period on that disability cover was quite long. But I was like, oh, hold on a minute, it's a proper break, because she had, with her particular insurer on her policy, she had a specific illness benefit, and we were able to get $8,000 paid out to her. And that was actually very helpful to her while she was, because she was off work, for a few weeks. So it was really helpful. So, that's not sort of something that people kind of think about as, oh, a special thing to help out in times of need. That's just part of the policy. So knowing what's in your policy is so important, I think, is my takeaway from that.
So with that in mind, I mean, because particularly when we live in a sort of set and forget kind of world, And I know I'm guilty as well, that I get my insurance policy and I immediately just stick it in a drawer, the policy document itself. Or in fact, these days it's all digital and it's probably lost in my Gmail somewhere. How do you actually get round to getting into what you actually can and what you can get out of that policy? You know, I mean, again, is it just a simple case of when you get your policy out, you maybe book some time with your advisor and you go through it so that you're completely aware of all the ins and outs of the policy?
Oh, look, yes, that is part of it. I think definitely when you're putting that initial cover in place, I mean, for sure, make sure you know what you've got, like make sure you know what you're buying. You're paying money for this. Make sure you know what it does for you or what it can do for you. But then I think also just ask. I mean, I'm sure Shane will agree. We love talking about insurance. So we live it and breathe it, and we could talk about insurance till the cows come home. So, you know, give us a call and you know, if it's a question of, you know, what does my trauma cover do again? Or, you know, how does this benefit on this policy work? Or do I have cover for this or that? Just ask us, because that's what we're here for, is to answer those questions and to kind of help you through that. We don't expect you to, you know, read through the policy wordings for different policies, but you can almost guarantee that Shane and I will. So because we love it, we do, this is what we do. So, you know, it doesn't matter what the question is, flick us an email, you know, call us, whatever. We're more than happy to help. And actually this can be a really fun part of our job too, you know, saying to someone, hey, actually you can make a claim for that. Like that's actually, you know, you walk away feeling quite good. So, you know, this is what we love doing. Just ask.
And I think that's really important, because I think one of the things that I've learned working in this industry for the last couple of years is that sometimes there's an interpretation of what we're covered for, and sometimes there's what we really are covered for, or we don't understand that we're actually covered for a lot more than we maybe think we are. So for me, I think that's one of the biggest takeouts that I have. And one of the things that I've done since I've started working here in Healthcare Plus is to get a real handle on what I am actually covered for and what it actually means. One quick question that's come through on the chat, which I think we can answer pretty quickly, is that do advisors and brokers work across all the insurance companies and the options, or do they work with a select number of companies of their choice? So I'll open that up to either of you.
Yeah, we do work with probably what our term is your first tier insurers. So they've generally got all the, you know, good policy wording. We've had good claims experience. They've got good financial ratings, etc. So we work across all the insurers we have available, the likes of your Astrons, AIA, Partners Life, Fidelity Life, so all your major ones, Southern Cross for health insurance, Partners Life, AIA, NIB. So we can work across all of them, which benefits our clients, because not one insurance company may fit everybody. So we have different options around pre-existing. Some insurance companies treat it different. We have a real good plan with Unimed where around medical, I know we're not talking about medical supposedly, but around covering pre-existings after 3 years. So, but not all pre-existings, but a fair chunk of them. So there are options available to you.
Oh, just what Shane said, I think. You know, I mean, yes, we do. It is really important that we can work with a range of insurers, because like Shane said, you know, like different insurers are going to work better for different clients for sure. And that definitely, because everybody's got a different medical history, and insurers do underwrite quite differently in some scenarios. So, you know, that's where, you know, having a chat with a financial advisor, you know, they will upfront ask you some medical questions, because that's just going to help them when they're putting together a recommendation for you. They know, oh yeah, actually the terms are probably going to be better with this insurer rather than this one, because we do, I mean, that's what we do. We work with them, we see it all the time. So so yeah, having that broad range of insurers that we can work with is great, because it just means we do the shopping around and you don't have to.
Yeah, I mean, I certainly know that through the work that we do inside Healthcare Plus. I mean, we work with Monument Insurance as our financial advisors because you have a wide range of companies that you can tap into to make sure that you get the solution that's best for the client at the end of the day. And we have no skin in the game, and you have no skin in the game around who that client, who that company is. Fundamentally, and again, this is with regulations that have been happening over the last wee while in the industry. I know there's a fiduciary sort of element to that you have to provide the best possible solution and service to match your client's needs. And so we offer the same. So we say that, that's why we work with Monument Insurance, because they have access to all the major providers in the New Zealand marketplace, whether it's life insurance, trauma, whether it's health insurance or whatever. So yeah, so I think to answer that question, we probably work with all the major providers in New Zealand. And on that subject of insurance providers, is the big question, the most important, the most popular question that came through is, do I really need insurance cover? And if so, what kind of type? So I think that's what everybody wants to know. Is this insurance a nice to have, or is it a must have? So I'll open that up to you, Shane, first of all.
Yeah, thanks, Alan. It's one of those things, like I've heard a lot of comments over the years as, yeah, it's a waste of money, or, yeah, things around the premiums are paying. I've even heard a few people tell me that they won't care if they die, which I find quite a funny little comment. But because certainly their family will care if everything starts falling down around them. But thankfully, I mean, that's generally from people who aren't clients. I do deal in the good that insurance does, because my clients have insurance, and that's what I deal with, is people who believe it does have some good. But what I get people to think about is, I have it myself. I come across things like my Facebook page, or you see it in the media with people trying to keep themselves alive with drugs that may not be funded. People are raising money for household costs when they can't work because of a medical condition, or if they pass away, they're trying to raise money for those that are left behind, or the funeral. And people may be quite surprised on the cost, even if affordability is an issue. Even just covering the basics, or the worst case scenario, making sure that your family's okay, because the last thing that we want to see, and our advice sort of tailors around making sure people don't go backwards. Most people worked hard for what they've got. They might have built up their wealth over a period of time, and it only takes one major event for them to go back 10 to 20 years to where they were, and that could be because they have to sell their house to survive, or to pay for their costs, to pay for drugs that aren't funded. I've seen that, I've heard that. I saw it with a local person where I lived, where they had a major stroke, and they had a lot of sort of assets around investment property. They had a business, and they lost everything. It just fell around this person's feet. So it was real sad to see. But in saying that, again, it comes back to a review. You might not necessarily need all the benefits that are out there, but have a review and get it targeted to what your needs are. Make it very specific to what your needs are, and then keep reviewing. It's like Kim says, we love insurance, we love talking about it, we love helping with claims, but most of all, we love to put plans together and make it targeted to your needs. So get a review and make sure it is specific to what you need. Otherwise, you could be just wasting your money.
And when you say what you need, I mean, I know there are various types out there. So we've kind of, in the conversation over the last sort of 5 minutes, in the last sort of 15 minutes, we've talked about life insurance, there's been income protection, and there's been trauma. Maybe just give us a little bit of a brief overview of that, or is that something you want to do, Kim?
Oh, yeah,
Kim or Shane?
I'm happy to talk to that.
Yep.
Yeah, like I guess the main ones that we're talking about here is your life cover. That's probably the one that people are most familiar with. Life insurance. It's really simple. You die and it gets paid out. Although in some cases, for instance, if you've got a terminal illness and the doctor says you've got less than 12 months to live, it can often be paid out earlier. There's trauma cover, which is that's the insurance that also pays out a lump sum, but that's if you are diagnosed with a really serious condition. And it depends on the number of conditions. This is one thing to really look for with insurers. And sometimes, not trying to diss the banks, but sometimes banks with their trauma cover products may only cover 10 conditions, whereas some insurers might cover up to 50. So trauma cover is one to make sure you do your due diligence on for sure. And so that's the one that pays you out for the big things like cancer, stroke, heart attack, all of those sort of big things that would have a big financial impact. Then you've got your income protection and mortgage repayment cover. So that's disability cover, which means if you were unable to work due to sickness or accident, it pays you out a monthly amount, and that can be based on a portion of your salary, or it can be based on your mortgage repayments. And that one's, there's a bit to that in terms of you can choose how long you want it to be paid out for. You can choose what wait period you want, so how long before it actually kicks in, and also that amount. So there are a few different factors there that can kind of change the pricing of that quite a bit. And you've got total and permanent disability insurance that pays out a lump sum basically if you're never able to work again due to a sickness or accident. And then you've got your medical cover as well.
Thanks, Kim. And you've just confirmed you are an insurance geek. All right. Another question in here. And I know that life insurance is generally sort of tied into where you've got liabilities like a mortgage, or where you've got children and dependents and stuff like that. So this question specifically, and we picked this question, it says, should I retain my life insurance if I no longer have a mortgage and I've got adult children? But what I also think might be quite good is, I guess it leads into a further question, which kind of ties into what we've just been talking about around, what are the different types of insurances and suited to different life stages? So Kim, seeing as you're the insurance geek, I'll go back to you.
And I'm proud of that term. You can call me an insurance geek as much as you like. Keep in mind this is pretty general, okay? But we can break life down into the 4 different stages. So you've got your under 30s, and this is when some people might have to think back a long time for this, but then you're probably at the stage got a fairly low level of debt. You could have a few assets by now, but you might not have any dependents. Insurance at this stage might not even be feeling very important to you, but this is actually a time when insurance is actually quite inexpensive. So it might actually be a really good time to just look at getting some into place. And particularly things like medical insurance, because it means that hopefully you haven't kind of had any major medical conditions arise yet. So getting cover in place now avoids hopefully avoids, having pre-existing medical exclusions later on, which is good. Moving then onto that young family stage. So, by now you might have a mortgage, a partner, you might have children. So probably life insurance at this stage is feeling a lot more important. And that's because, you do want to make sure that if you pass away, your loved ones, they'll be able to stay in the family home, hopefully without a mortgage, or with maybe just a small mortgage. You'd want to make sure that there's money available for, for living expenses for, the next, X amount of time. Because keep in mind that if you die, your salary, your future earnings, that goes with you. So particularly if you've got young children, adding in that buffer is really good. Income protection and mortgage repayment cover, they're probably feeling a lot more important now as well, and that's because your living expenses are often quite high in this young family stage. You might have there might only be one income earner. Somebody, one person might be at home with the kids or only working part-time. Your living expenses could be quite high. Your mortgage might be quite high. So if something happened, if you couldn't work due to illness or injury, and at this stage of life, there would be a huge negative impact there for your family. So, having some good protection there around your salary, that's just a really sound part of your overall, I guess, financial resilience plan. Keep in mind also, because we don't always have a huge buffer in our savings account. So, having some protection there is really important. And then trauma cover as well. This is a good time to be thinking about that too. And that's the one, as I said before, that pays you out if you're diagnosed with one of the covered conditions. So, heart attack, cancer, stroke. So yeah, those are good for that. Moving on then to that older family stage. So this is when perhaps your kids are leaving home. Although I hear that they're still quite expensive even when they do leave home. But your mortgage debt at this stage is hopefully decreasing, or it might even be gone. Your assets like your savings, investments, KiwiSaver, all of those things are increasing. So in terms of that life cover, you might not actually need as much now as when you were in that young family stage, which is quite good, because it's probably, life cover is probably feeling a bit more expensive now as well. And also you might be okay with lower levels of income protection, because you might be servicing less debt. Hopefully your mortgage is, as I said before, gone or smaller. And also, if you're a couple, if you're both working, if one of you was not able to work, there wouldn't perhaps be quite as a severe kind of financial impact as at kind of that young family stage. So I think this is often a really good stage to have a really good review, just to make sure that you're not overinsured for your situation. This is also when there is often an increased kind of focus on your health. So having a look maybe at, major medical insurance, hospital cover might be more important. And, hopefully it's already in place by this stage as well, before any kind of health issues arise. And then you've got retirement. So income protection isn't required any longer. Hopefully by this stage, you're not working anymore. Medical insurance at this stage is probably feeling quite important. So at this stage, you might even be looking at increasing your excess on your medical cover, because that's kind of just help with, keeping those rising premiums under control, because they do start, hiking up a bit there. And at this stage, you still might be interested in a little bit of life cover, just to pay off, any remaining debt, or pay for funeral costs, which, they're more expensive than what you'd think, a funeral. Or some people even keep a little bit of insurance cover as a type of, I guess, inheritance for their loved ones. So, a few different options there. So you definitely, over those stages, you can see, there are definitely times when some types of cover feel a lot more important than others. And yeah, so it's just, you've got to tweak it your whole life. Definitely, you just got to keep reviewing it, keep tweaking it, make sure that you're not paying for more than what you actually need, and just get some good advice around, protecting the things that matter at the, time that, is appropriate.
Righty. Well, thanks for that. That was actually really interesting. And so that gives us a sort of broad overview of the types of insurances that might be important at different times of your life. And I guess to go back to the original question that kicked that all off, should I retain life insurance with no mortgage and adult children? Well, to keep with the theme of the evening, I would suggest, like you said in your answer there, that it's a good idea right now to go and have a chat with your advisor and see whether there's a point in reducing it, getting rid of it, or what other things are sitting in there that you might actually still want to keep in there. So have that chat with the advisor. I'm going to come to the last sort of question of the evening. There are a couple of questions in the chat, and we're pretty much running out of time. So very quickly, Shane, I'll give this question to you. And it's, I guess, it's a trend that seems to be out there, but there seems to be a trend of consolidation or transferring of services among insurance providers. What should we be thinking about there? Is it a trend? Is it a worry? So over to you.
Yeah, personally, I don't feel it is. You know, over the years I've been doing, I've seen insurance companies that are amalgamated. Yeah, the policy you took out is always your policy, and if it transfers to another insurance company, you know, we saw Resolution Life purchase AMP's life book. We saw AIA purchase Sovereigns. Chubb's just purchased Cigna's. I think maybe a lot of it is due to around the regulation. Banks tend to have got out of it or have an affiliation with those that have purchased it. You know, the bigger insurance companies. So Partners Life just brought BNZ. AIA brought Commonwealth Bank, ASB. So we see that happening. But if anything, I think it strengthens things because you're now with a bigger company. Yeah, you know, people might you get some people that say, oh, that insurance companies don't pay claims, but that's what they're in it for, is to pay the claims. And I think in 18 years I've had one claim that wasn't paid, and it was clear non-disclosure. I've had no problems with other claims, so I don't feel, quick answer, I don't feel there's any issue around it. It happens, tends to happen all the time, and if nothing else, perhaps strengthens things.
Yeah, I mean, I think so. I mean, I think it's important to remember that you have a contract with that provider, and so if that provider is bought over by another provider, then that contract is part of that consolidation. And I guess ultimately, like you say, it probably is strengthening the market because we're getting bigger and more stronger companies involved in it. And I guess that's one of the things that we always look for when we look for who we get our insurance from, is make sure we get it from a company that's not going to disappear overnight and go out of business. So I think that's a pretty good answer there. I just want to quickly, before we end, there's just a couple of questions actually that came through on the chat. And to be fair, I could probably answer it myself. But so as we get older, life insurance becomes more and more expensive. Is there a good time to call it a day, or a way to keep reducing cover over time to avoid blowing it out of proportion? Well, I mean, I guess you've answered, I mean, both of you guys have answered that question in part tonight through most of your answers. And I guess the question is, if you do feel like it's becoming more expensive, have a chat with your advisor and see what you can do. Because if you can reduce it down because you've got less dependents or less assets to support, or as Kim said, if your KiwiSaver is increased and your savings have increased, I guess you can offset those kind of things. So I think I can probably answer that and say it's for expediency that it's probably a good idea to chat to your advisor. And the last question from Suzanne here is, I have set my different insurances separately. Would it make sense to go to an advisor and review them all at once?
Yes, would be the quick answer. I know for myself, when somebody comes to me and I don't know everything they have, it's hard to give advice around that. So when we do a review, we ask a range of questions to sort of get an idea of what your risks are. And if we don't know what you have, then it's hard to give you advice. And we can also get people to sign an authority. If it's not with us, we can go and get that information, which helps us out too. But we're also looking, when I talk to my clients, I'm also just popping a few questions in there to find out if there is a claim. So I always say to my clients, get in touch with me when anything goes wrong. So that can help us too when we know everything that you have. And if we know you've had an issue, there could have been, I mentioned earlier, a client who claimed from having cancer 3 years prior. And so that can prompt us to say, hey, we need to explore that before we actually give you any advice. And in my client's case, there was a payout of something around about 170k. So that actually changed my advice because the mortgage was now reduced to 170k. So they didn't need as much. So yeah, it's good to know everything you have. So yes.
So yeah, so I mean, I think if you've gone ahead and done some things directly yourself, when you do have a chat to an advisor, it's good to make sure they know everything that you've got there. And if you don't have a financial advisor, then if you are a member of Healthcare Plus or a union member, you can come through Healthcare Plus and we have a nationwide network of advisors like Kim, like Shane, in most regions in New Zealand, and the advice is free of charge. There's no cost to that conversation, and if you just want peace of mind around that, then and an expert to take a sort of look at it and see what you've got and potentially what you might need or what you might not need, then just reach out to Healthcare Plus and we can look at doing that. So I think we've gone through everything. We seem to have answered all the questions in the chat, and it's been a very good and insightful evening. So I guess for me, it's just a case of saying thanks, Kim, once again, and thanks, Shane, once again for your help in running the in answering all our questions that we have around insurance. I'll also do a shameless plug for our next webinar, which is in August or late August or early September. And it'll be with Liz Coe, who is a financial expert in New Zealand. And again, we'll be looking to get questions from everybody around their money issues and what's happening in the world around money right now. So look out for more invites for that. But thank you, everyone, for turning up this evening and for asking your questions and for giving up some of your time. So thanks very much and have a great evening, everybody. Thank you. Goodbye.
Thank you.